going to get started. Thank you everyone so much for being here today. This is my first time presenting in this type of environment, so I hope everybody can hear me. But we're really excited today to be talking about Fundraising 101. My name is Courtney. I am very clearly not British. I'm from the United States. I grew up in the Midwest of the US and really fell in love with consumer, e-commerce, and retail when I was in uni, where I studied marketing and then interned at Target, which you'll be aware of if you have any business in the US. After 6 years of consulting within consumer and retail, I moved over to London to get my MBA at London Business School and also pivoted to the venture capital world, which is what I'll be talking about today. I work as an early stage investor at Active Partners. Active Partners is a leading consumer investment fund. We like to say that we invest in the iconic brands of tomorrow. I'm on the early stage side. On the early stage side, we invest in brands that we like to say are consumer and consumer plus. So that's your core consumer, hospitality, retail, food and beverage. And we also invest in fintech, femtech, anything that has a consumer angle. We also have a growth fund at Active Partners. We've been investing out of that fund for over 20 years. Some of our first tickets were in the likes of Soho House when it was just one site, and Rafa when it was just an idea on a piece of paper. I have to call out, we have one of our portfolio companies in the audience today from Code First Girls, and they're also based over there, their banner's there. If you work for a small company or a large company and you need tech talent, they are the people to talk to. Okay, I'm done selling now. So today I'm going to talk about the fundraising journey. I will caveat with fundraising is not one size fits all. It depends entirely on the business, the stage of your business. And there's also a caveat that VC fundraising, which is my specialty and what I'll focus on today, is not necessarily the right way to raise capital for every type of business. So this entry slide is just kind of showing the different journeys of fundraising. You can see that at Active Partners, we focus across pre-seed and Series A across the two funds that we have. And you'll notice that the key thing to call out on this slide is that depending on the journey and the stage of your business, you're fundraising for different reasons. So the businesses that I look at in the pre-seed and seed stage often are trying to build out a product, prove that there is a space that is interesting enough that it needs a new product or service, or they're going to market and trying to prove traction. If you're working with a VC fund and trying to raise capital at a later stage, you're often trying to prove scalability, profitability, or potentially growth and new market entry. So the point is that it really depends on the stage of your business, the type of fundraising that you'll need to be doing. Today I'm going to be focusing on venture capital fundraising, but there are a lot of other ways to fundraise, include bootstrapping, which is quite obvious, crowdfunding, venture debt, and more. I wanted to start by providing a kind of a journey into fundraising. There's 5 stages that I split this into, and I want to provide some tips across each of the stages. I think that, again, I'm trying to provide tips that will be helpful as key takeaways, but I'm happy to answer any questions at the end if there's anything specific that I didn't answer. So the first stage is networking. And I actually wouldn't like to call it a stage. I would say that networking as a business owner is something that you should be doing constantly. I think one of the biggest mistakes that we see at a VC fund is that founders come to us when they really, really need capital. So they have maybe 4 weeks until a cash cliff, and they haven't done the networking, so they are having a hard time kind of building that VC network, which is required to really fundraise successfully. You don't only need to fundraise with VC funds, it's also really important to fundraise with fellow founders. Founders are a really great opportunity to help you learn about the rest of the ecosystem, and they may just be your entry gate into other fundraising. I would say that we all know that a warm intro, so having somebody reach out on your behalf and kind of recommend you speak with them is the best way to get your foot in the door. But at Active, we also really do look at the inquiries mailbox, which you can find on our website. If you send us your pitch deck and you send us a little bit of information of why you're a good fit for our fund, it will always pique our interest, and it's a good way to kind of get your foot in the door. Just make sure that you're reaching out to VCs that actually fit kind of the scope of your business so that it's relevant. Moving on to the next step. own your pitch. I think the pitch is probably what I get asked the most about as somebody that works in a VC. But I would say the first and most important thing to state about a pitch is that it's really important that you feel comfortable and that you're really owning your own style when you're pitching to a VC. When I think of all of the pitches that I've heard over the 2 years that I've been working at Active Partners, the ones that stand out to me the most are those that are extremely authentic. It's a founder that had a problem, and then they saw a solution, and then they built a business to solve that problem. And they felt comfortable sharing that story because it's something that they related to. I think building that authenticity is easier said than done. I would recommend to some founders that it would be good to take a storytelling class or a pitch class if this is something that you really struggle with, because the pitch really is a good way to kind of get your foot in the door and start selling your business. That being said, during pitch sessions, I actually prefer to focus on the founder and their story, learn more about why they started the business, so it ends up being more of a dialogue and a conversation than somebody just presenting at me. I think that some founders find that a little bit more comfortable than just trying to sell immediately. So maybe rethink the way that you think about the pitch. The second piece I would say is that when you're pitching something, know your numbers. You'd be surprised at how many founders kind of have, they have the idea, they have some traction, and then they don't understand necessarily their unit economics, which is really important for e-commerce or retail, or they don't know how many customers they have. Small things like this, even if it's not necessarily what you own when you're the founder, if you're not looking over it and you don't have it in the pitch, it can come off as you don't really understand your business. And then finally, the last thing I would say is that a common theme that I've seen, especially more recently, is founders bringing in third-party advisors or others to kind of help them with their pitch. Maybe you have an advisor that's an expert in the finance industry, so they seem to have a really good reputation, but we always prefer to hear from the founder first. This is not to say that we're not impressed when you have really incredible advisors on your team. This is really important, but I think the message that I'm really trying to focus in here is that it's so important that as a founder you feel like you can own your style, you can pitch to us, and I promise that that will come off as more authentic, and we will remember that more. Organization matters. I think that this is something that, again, seems like a no-brainer. You need to be organized to start a business. But I would recommend that if you plan on fundraising anytime soon, you start to get your ducks in a row early with applying for the paperwork that you need, starting a data room, start saving emails from customers talking about how much they like your business. It's so important to us to have this information. A lot of people don't know that, especially as an investor, when I talk to a founder, the next step is for me to then go and to sell it to the partners at my company. So I become a salesperson for your business, and for me to do that, I need all of the information. And so when a founder has the information in a really clear, concise data room, it makes my life a million times easier, and it also makes me better understand the business, because you really want me to understand it as if I were you, so that I could go and sell it and make the partners of the fund as interested in the business as I am. I would also recommend that if you're in the UK and you're interested in raising at a really early stage, looking into SEIS and EIS early on, people are surprised at how long it takes to get these types of paperwork in, and a fund like mine, which focuses on EIS eligible companies, it's really an important kind of tick in our box. Next would be find the right fit. Not every VC is a good fit for your company. Just because there's capital doesn't mean that it's something that would be a good fit for you in the short term or the long term. I would say understand that when you're entering into an agreement with a VC, you should think of it as a long-term relationship. You want to make sure that your goals and your vision are understood by the VC, and that they will have your back when you get to a point where there's some hard times, because that will definitely happen. I would also say that if you're at the earlier stage, who invests in you at an early stage can have a massive impact on your later series. So if you have somebody like an expert in consumer, or somebody that has a really strong network in Asia, and that's where you're trying to move your company, that can help your fundraising later on. And that is a really, really key part of the journey, is being able to consistently raise capital when you need it. And then finally, don't forget the legals. I think this is everybody's least favorite part of fundraising. And a lot of founders don't really take the time to understand how long this process can take. I've had a lot of conversations with founders where they get frustrated because we've already had 3 weeks of diligence and then we're about to close the deal, and they don't understand that it's not as easy as just then putting money in the bank account. There's a very lengthy legal process that involves setting terms, involves aligning with other VCs that are potentially investing, aligning with all of the angels that have invested in the past. That means there's a lot of people at the table trying to negotiate about your business. So I would recommend even taking some sort of entry-level course or looking at seed legals to understand what are the basics of term sheets, understanding what you have as non-negotiable and where you're flexible, and kicking off the process ahead of time, tying with that organization matters bullet, that the more organized you are in this, the easier it will be, and it will also look extremely appealing to investors. So the key point of all of this, that fundraising is not a one-size-fits-all. It really depends on your business. This is very much from the venture perspective, but it's a very dynamic journey. It will depend on the stage that you're at, and I hope that some of these tips are at least a helpful starting point. And before closing the presentation and moving on to Q&A, I wanted to talk about what we at Active Partners look for in an investment. And I think that this actually probably appeals to most investors, not just us at Active Partners. So first, we look for a visionary founder. This means that we understand that the founder is really kind of the identity, the core of the brand. We want a founder that has a vision. They understand what they want the business to look like in the future, and they really want to break boundaries. Second, we look at customer engagement. This is extremely relevant for retail and e-commerce. We like brands that are building really strong communities that show that there's strong consumer traction and retention. But we also like brands that show that they have these strong communities and engagement because the product or service is best of its kind. So this is something that I think specifically in the world we are today, where there's a lot of noise, customer engagement is one of the most important factors that we looked at. And if you're a pre-seed company and you don't yet have engagement, it's proof of how you would create that engagement, what your go-to-market would look like. There's different ways to display that. The third piece is an edge. This is quite broad, but the edge could be a founder that has already exited multiple businesses in this space, therefore is an expert, or has a knowledge that nobody else has. It could be a product or service that is so innovative that it's going to completely disrupt the market. We're just looking for something with a distinct perspective and a distinct point of view. Growth potential. Growth potential has always been important. I would say that the funding market that you saw in 2021 is very different than the funding market that we see now. We used to see a lot of VCs investing in growth at all costs. That meant spending a lot of money up front to get a lot of customers in the door. I would say now VCs are a bit more risk-averse, looking for growth potential, but doing so profitably. So that means really understanding your unit economics and what it will take for you to grow. Values-driven. This is something that has been really core to Active Partners' kind of core and mission from day one, is investing in companies that reflect the values of consumers, which are more and more looking for companies that are sustainable and good for people and planet. Some of our investments are really strong in this area, including Code First Girls, as well as Finisterre or Tala, which is a sustainable athleisure brand. And they'll be speaking here tomorrow as well, another plug. But this is something that we think is almost default, or kind of should be the default for a brand that is just starting. They need to have some sort of mission-driven or value-driven. And then finally, global ambition. This is important when you're trying to, if you're getting venture money, you're looking to kind of grow your business, likely beyond the UK. Look for a VC that has experience in doing that. I think that we talk to a lot of businesses that's their goal is to grow to the US, and we always help them understand what are the steps that they need to do that. But we like partnering with brands that have a vision of moving beyond just the UK, and we know that we're good partners to help with that. So with that, I would love to take any questions.
Hello. Oh, sorry. Sorry. So thank you very much. Everything was very useful. I've got a question. At the moment, I'm trying to raise my pre-seed round. And I wanted to ask you, like usually what I'm doing is trying to find on LinkedIn who is an angel investor or who is like the ventures capital available in the London. But I'm not too sure how are the best practice to see like if there is like a mutual match that you were mentioned before. So if you can explain me a little bit more how I can make, well, how can I be sure that I'm finding the right match for a venture capital and also, well, advice for the outreach with angels. So yeah.
Thank you. So if I understand, you're asking how you find the right venture capital match for your business. So I would say step one is to look at other companies that kind of inspire you in the space. So obviously you're probably building something super cool, super disruptive, but find other companies that have done something in a similar vertical in the past and that have really inspirational growth stories, and see who funded them. And if you can, talk with the founder and ask them about their experience with that investor, because I would say that obviously there will be some relationships with VCs that aren't as strong as others, but I think founders will be the best people to tell you what the relationship is like with that investor. I would say the second thing is you really need to hone in on specifically your stage and who's kind of investing and deploying in that stage. I would look at different newsletters or look online, just do some desktop research and understand who's deploying a lot of capital in the moment, to know who you can actually who you can speak with, and who in that moment would be somebody that's actually kind of investing in your space. And if you can, just try to get time with that investor, even if you're not necessarily ready to pitch your deck or pitch your business, you're at least kind of getting on their agenda. And then the third thing I would say is to go to conferences like this, meet other founders, talk with VCs. This is a good way to have a warm intro, so that when you are kind of going out, you have a bit of a network built around you that helps you kind of propel into fundraising. Other questions?
Hi there. Active Partners, do they have any resource hub or any kind of support hub for kind of additional questions that we might have kind of once kind of things are rattling around in our brain later on?
It's a bit hard to hear. Was the question, does Active Partners have a resource hub for founders or for potential founders? So I would say one of the best parts of getting funding from a VC fund like Active Partners is we have a really strong network. So whether you're in our early stage fund or you're in our growth stage fund, as soon as you enter the fund, you have access to all of these other kind of incredible founders that have come before you. So if you're in e-commerce or if you're in retail, we can connect you with the likes of some of the experts at Finisterre, Tala, or even Rafa to help with learnings. That also means that we have connections to many different talent when your business is growing and you might need to bring in other people. We hold different events for our founders. In 2 or 3 weeks, we're having a drinks event for our founders and our investors to meet. So we're always trying to make connections, because I think something we've learned is that one of the best ways to be helpful is to kind of provide that network. The second thing that we do, it depends on the stage of the business. On the growth fund, we often would take a board seat. And our partners and some of our leadership at Active are extremely experienced within the spaces that we invest in. So they go and they're actually very active on the board and serve that purpose. From the perspective of if we offer anything pre-founders, I would say that the best thing to do would be to attend conversations like this, or I'm happy to chat afterwards as well. But there are millions of resources out there on kind of how to break into VC fundraising, and of how to network to get your way into VC. But I do think the best way to do it is just to meet people and network.
Hi. I just wanted to find out on the chart that you mentioned pre-seed, seed, and Series A. At what stage do you normally come in and invest in companies? That's one. And secondly, in terms of the investors, what kind of people are those going to be? Like high net worth institutions, people related to that specific sector that the company is in?
Yeah, that's a really great question. So at Active Partners, we have two separate funds. I work on the early stage fund, and we have a growth fund. The early stage fund, we like to invest at the pre-seed and seed stage, mostly seed. We would do maybe like a pre-series A, but I would say we kind of play in the seed area the most. So that means that you're likely raising anywhere from 500K to 2 or 3 million. Your round size is likely 1 million to 5 million. You probably have a product in the market already, and you have a bit of consumer traction. We've done a couple of deals that are also pre-seed, pre-product, and to do that, we really need to have a strong kind of compelling understanding that the founder is going to build something really incredible. To back something before the product even launches, we focus a lot on the founder, and then we also, of course, look at the market and see if the market is kind of ripe for disruption. The growth fund invests more at a Series A, Series B level. Those are companies that are already profitable, likely have 5 million plus in revenue, and are looking for some growth capital to really just fuel the next stage. The second question was around our investor pool. So in the early stage fund, we're really lucky to have a pool of investors that I think more than half are actually consumer founders themselves. So that kind of provides that network that I was talking about, where when we're investing in something, we already have an expert kind of on our own LP list that helps us understand the market space and acts as a mentor for the space that we're investing in. I think that's something that's actually quite unique about us. Any other questions? Okay, thank you so much.